We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. We're back in the studio with Gary Coe. He's laughing. You're smiling. You're having fun now, aren't you, Gary? You're kind of liking this, I think.
Deal junkie. Huh?
Deal junkie. See, if you come on this show, you have to be a deal junkie. I'm not sure if you knew you were a deal junkie before you came on here.
I think I am.
Well, we've proved it now. We know you are.
There's no doubt about it. Have you ever communicated that before, that you're a deal junkie?
No, not in those words, but I know in 2022, I sold 4 complexes and bought 6. Thought,
that's a deal junkie.
Yeah.
10 escrows in a year, that's a deal junkie. Absolutely. Yeah.
You qualify.
So I guess I'm guilty.
There are worse things you could be. We're proud to be deal junkies.
Yes. Yes.
Right.
We define success by how many escrows we have per year.
I think the definition of a deal junkie is somebody who just does deals because they want to do deals. Like, you don't have to do a deal, but we want to do a deal. We've made it to the point where we could stop, but you just can't stop for some reason. It's too much fun to keep it going. So, all right, Gary. At the break, we talked about maybe you've got a couple of deals you'd like to share with us. We'd like to spend some time just talking through a deal or two with you. Tell us, you want to talk about a favorite deal you've done or maybe a least favorite deal you've done?
Okay, favorite deal was called a multifaceted because I got to the point where we had a business called Auto Adventure that was originally an all Honda car wrecking yard inside a building, but we ended up expanding into other brands, and I think that may have been a mistake. I'm not sure. Anyway, we were making the rent and paying the bills, but we weren't making any money. And a neighboring business offered me $3 million for that building. Really? So net about 2.8. So about this time, a apartment came up in Albany, 100 units for $6.5 million. I thought, well, that sounds pretty good. So I netted 2.8 out of that $3 million sale, put the whole 2.8, and in the first year, we had almost 100% turnover because we moved the rents up and we canceled the free cable TV, did a couple of other things. And so had a lot of turnover. And along with that comes some expense.
Mm-hmm.
So we're going along just fine for probably 4.5 years, maybe 6 years. And I'm down in Arizona at my Arizona house, and I get a piece of mail, somebody wanting to buy that apartment. How did they get my Arizona address? It's not any place.
Mm-hmm.
But there was the letter.
They skip traced you.
And it has a email address. So I emailed the guy and I said, it's absolutely not for sale. It's a gold mine. Why would I sell this? And it would take over $18 million to even get my interest. Paid $6.5 for it, and just trying to make the guy go away. Well, my friendly broker that I've done a lot of deals with, I told him about that, and he says, I can get you $18 million for that. You can? He sold it for $18,650.
I think he set a record when he sold that one.
180 a unit?
For Albany, yeah.
Really?
Yeah, I think so. Yeah. He did good for you.
180 a unit in Albany.
Shout out to Ben Murphy.
Mm-hmm. Oh, yeah.
One of the best brokers out there, multifamily brokers. Yeah.
Mm-hmm.
So I went on to, I did 1031 exchanges into other properties. But that property was a gold mine all the time that I had it, and once I sold it.
In that first year where you had all that turnover, was it bleeding? even with the big down payment, or was it?
No.
It was paying for itself to do
Yeah.
the turns.
Yeah.
So you had enough. The 2.8 was enough to put you in a position where it cash flowed enough to take care of itself.
Yes. Yes.
What were the rents on that when you sold it? Do you remember?
3 times more than when he bought it.
I guess so. Man alive. Wait, was that in 22 that you sold that?
Yes, I think it was.
Yeah. That was. I remember that coming on the market.
Did that sort of spur your 10 deals that you did that year?
Probably.
Got the wheels turning?
I don't remember. I remember we did 4 sales and 6 purchases, but I don't remember
In what order?
which order.
Yeah.
I think Franklin Common was one of them.
22 was a blur for all of us, so you were right there. We were doing the same thing. It was kind of hard to keep track of everything. It was fun. Maybe we'll get back to one of those years, one of these years.
There's another one called Ames Creek that's there in Sweet Home, and the guy that I bought Cascade Meadows from said that it was the first apartment that had been built in Sweet Home in, I don't know, 30 years or something like that. And they not only filled it, but they had a waiting list of 30 people. I thought, wow. Well, his brother built this other 12 units. And I told the brother, I said, you don't need to worry about leasing that. As soon as you get an occupancy permit, I'll pay you cash for it. And so I did. But about the same time, the one up the street that was called Happy Place.
Happy Place. Yeah, I tried to buy it twice.
I don't remember. I think it changed names now, but the
It
Happy
sold.
Place came on the same time.
Yeah.
And so you're really looking at, in a 2-year period, bringing 100 units in a little town like Sweet Home.
Yeah, those first 30 perform a lot better than the last 30.
Yeah. So since then, one of the brothers, maybe both brothers, have talked to me. They have other property. They want to build apartments and want to know if I want to buy it. And I said, I don't think so. Not yet. I don't think the Sweet Home can support that.
Yeah.
I met with the manager of the economic manager of Sweet Home, and I said, "You guys are like 30 years or 40 years behind Lebanon." He says, "I'm painfully aware of that. That's my job, is to change that."
Yeah. I mean, Sweet Home's kind of a cool place, but you're right. You can only build so many units there, and then you got to give it a little bit of time.
Yeah.
Lebanon's been somewhat overbuilt a little, but that's sort of sorting itself out. But so that's a good way when we talked about how do you decide to go into a tertiary market or not. I mean, when you got somebody with a waiting list and they filled the thing up in a couple months, you know that they're pouring water on the desert. Like there's people just wanting units, but there's only so many people, right? And a little town like that, you think, oh wow, we got a big waiting list. Well, after you get 100 units out of the ground, there's no more waiting list. So you got to be careful. Population growth, wage growth. There's a lot of different factors that you look at in those small markets, and a lot of lenders won't go out there just because the market is so small. That usually as our cycle as we go into contraction tends to be that people sort of move closer to the city centers, closer to the I-5 corridor, and so you might lose populations in some of those really far outlying markets. As things expand, every little market starts to finally light up, but then sometimes just as they light up, the rest of the market kind of comes down again. So you've taken and shifted your risk from old buildings in more primary and secondary markets to newer buildings, so you have less risk with the asset itself costing you a bunch in maintenance, but you have maybe more risk in the demographic of potentially maybe dealing with more vacancy than what you might deal with in other places, or just maybe a little bit harder to fill some of those.
You're right, and the same thing has happened in Pendleton, where a new complex across town came into online, and even though they're more expensive, they have more amenities also.
Yeah.
And even though we have a very, very nice 36 units there, we've had a hard time keeping them full.
Yeah, I was always taught that when the new product comes online, it's sort of painful in the beginning because now you have new competition and you're competing at the same rent levels, and so somebody's going to take the brand new unit, the more amenities, whatever. Once that stabilizes and your market absorbs, ultimately that newer product will help drive the rents up because everybody needs to push that rent up over time. Even that new building, they're doing their lease up just to get out of their construction loan and get the perm or whatever. So they're hustling just to get bodies in there so they can get a rent roll going. They might even lax their screening a little bit just to make sure they can get that building filled up. Once they have it full and it's stabilized, then those rents start to creep up. And what we've seen kind of in certain markets like Lebanon and Salem is that we experienced more of overbuilding in the last couple of years than we had ever really experienced. And so this is a new thing where we have ongoing concessions and we're trying to keep tenants in place and all this stuff. But other markets like Portland and even some of the outlying areas outside of Portland are already seeing that shift to where we're moving back into undersupply. And we listened to Patrick Barry the other day talk about how at some point this year, most of the markets are going to go from oversupply to undersupply. It's just a supply and demand thing. And, we'll have much lower vacancy, which then rents should start to go up again. And as landlords, we should feel a lot better about how the market's moving. But you are taking risk. And I do the same thing you do. I go to small markets that I feel I understand better than maybe some of the outsiders don't understand. A lot of our investment happens from out-of-state investors. And as locals, we know that there are certain markets right around us. Like if you're investing in Sheridan, you know that McMinnville's right up the road. Somebody coming in from, Colorado, they're like, well, maybe I'll go to McMinnville because it's close to Portland. They're not going to make it all the way to Sheridan. You understand the dynamic of where the people are and what's happening, which gives you an advantage. I think it gives us all an advantage if we are investing locally, just that we know the market better than the outsiders do. You then just have to be able to be bankable enough to get a lender on board to go with you and go do that deal, unless you're going to pay cash. So, or seller carry, which you've done a lot of lately. You've done some big seller carry stuff, haven't you? You did a big one in Kaiser recently, right?
No,
South Salem.
South Salem,
Yeah.
That's right.
Yep. Baxter
Ridge.
What'd you do in South Salem? I'm curious.
What am I doing?
Well, yeah, what'd you do in South Salem? Seller carry.
Tell us about your Baxter Ridge deal. How'd that come together?
I don't think that was as good a deal. I think I paid too much.
But you wanted it really bad,
I guess.
from what I remember.
I guess.
Like, I mean, like it wasn't a deal that was on the market. You specifically said I would like to own that property, right?
Yeah.
And went after that. Okay.
What is it? What kind of property?
It's 96 units,
Okay.
3-story buildings. Really, it's a nice complex.
Newer construction.
Beautiful project.
Newer construction.
20.
I think it's 97.
Okay.
98.
That's 25 plus years old, probably.
Okay.
Which we consider to be newer when we're buying 100-year-old buildings.
It's like brand new to me.
I don't look at it as new. Like Franklin and Cascade,
Yeah.
those are
pretty new.
they're less than 5 years even now.
Yeah.
So why'd you like Baxter Road?
Looked like a nice neighborhood. Looked like a well-maintained building. The owner is, I guess there were a couple of partners. You were managing it
Yep.
before, weren't you?
Yep. We managed it before.
Yeah.
Yeah. I think one of the partners had some health issues. They were looking at divesting, and it worked out. And I think you came along, and I will say that, you're a great buyer to work with. You're also typically, if you find something you want, you're willing to pay top dollar for it and be easy to work with. So not anybody would have been able to take that deal down, and they probably wouldn't have sold it to somebody else. But to your point, it's kind of a long-term play because it's a great location. It's a great building, but you bought it at the peak and you might have paid a little bit too much, which will sort itself out. I mean, it's not going to take long before that sorts itself out. It's just kind of, first couple years we take a downturn and it is what it is. But you traded out of something. You sold something to go into that, right?
I did.
Something out of Portland that was older.
No, I can't remember what I sold.
But it accomplished your goal of going out of older product into newer product, I think is what you were trying to accomplish.
Oh.
You had
I'll
something.
tell you what it was.
Yeah.
It was the park in Albany.
Oh, okay. Well, it was a nice project too, but it was a little bit older.
Yeah, it's an
a
old-
little long in the tooth, needed a little work.
Yep.
That was a nice
Yeah.
project.
Was that the $18 million one? The park in Albany?
The park went for like 12 or 14, didn't it? I can't remember. There's too many deals in my head.
I don't remember either.
So it sounds like you had a store of value lens when you looked at Baxter Ridge. You were looking to just store value in a good product.
No.
No?
No, I was looking to make money. that's the problem. Is it's got some good cash flow right now because it's interest only
Mhm.
for 3 years.
The seller financing part?
Yep. And then it goes to amortize, and it's and the payment's going to be I don't know, 82,000,
Mm-hmm.
and that's the problem.
96 units paying $82,000 a month.
Yeah.
Yeah.
Is we're only my check from SMI is last month was 100, so that'd be fine. But there's been times when it's 90.
Yep.
And
Yep.
that doesn't leave a lot of room because I still have to take care of insurance and property taxes out of that.
So you bought it, you paid a premium. Part of the premium was to get the seller carry because they offered you terms that made it make more sense, but the seller carry was only good for 3 years. So then
No, it's good for 10 years.
10 years,
but it's
okay.
Interest only.
Interest only. Okay. All right. So you have decent money on it, though, for 10 years.
And he put a clause in there, there was no prepayment.
Oh, you can pay it off any time.
Have to pay it off in 10 years, but you can't pay it off ahead of time.
Oh, there.
Oh, no
there's no
prepayment.
prepayment. When we say no prepayment, we're talking about no prepayment penalty. You're saying you cannot prepay it over the next 10, which puts you in a weird spot because then if the market's not where you want it in 10 years, you may not want to refi. But you have,
Oh, I'll be fine.
yeah.
Yeah, it's still a good interest rate. It just goes to amortizing. It's probably better than any debt you can get now.
That's true.
Yeah.
It stays at the 4%.
Yeah, it stays at 4. I mean, you may not see 4 again in the next 10 years. So
Yeah.
you probably did when you lock in your debt for 10 years and it's worth the value of that deal is more than just the deal. You liked the location, you liked the building, and you got good debt along with it. I wouldn't say you overpaid for it. It's probably not the slam dunk you've made on several of your other deals, though.
Yep.
So that 12 unit in Sweet Home, you were talking about how it kind of got overbuilt. How long did you fill that project quickly, or what was the story there?
No, we did not fill it quickly, but it is full.
Hence, no more buying of other
Gotcha.
new construction next door.
No, you just have to pay really close attention on what else is going on in the market.
Hmm. Well, and even like Sweet Home, your tenants weren't people previously living in Sweet Home. You're banking on tenants moving from other markets into Sweet Home because the alternatives are not as good as what you can offer, whether it's price or amenities. So you're set, and that's where new construction, specifically in tertiary markets, is you're looking at the population changes and growth of the actual Salem metro, for lack of a better term. You have to be cognizant of all of that when investing in Sweet Home or Lebanon.
Yeah, that's certainly what happened in Lebanon. Lebanon's been growing quickly, but all the units that got put up out there, a bunch of people moved from Albany to Lebanon just because it was growing.
Or Corvallis.
Yeah, or
Cost of-
Corvallis.
the cost of living in Corvallis pushes people out, but
Yeah.
you're 17 minutes away to get over to Lebanon. So, and then you're another 15 minutes or 20 minutes to get to Sweet Home. So it's a great little spot. It's beautiful. It's got the lake. You're on the way to the mountain. There's a lot of quality of life stuff that happens in Sweet Home. So it took you several months. I think we weren't managing that for you in the beginning, but that 12 unit, did it take was it a 6-month lease up or 9-month? Do you remember how long it took? It took a while.
I would say it was a little over 6 months before we
Okay.
all filled.
That's really not that bad in a small market, to be honest. That's about normal. Remember that? Did you ever try to buy Happy Place, or was that you never looked at that one? Did you, the 40 unit?
I looked at it, but you know why I didn't go any further on that? I didn't like the neighbors.
Really?
And you look out the back patio, and it's a crap.
Well, you look out the other way, it's a field that they're going to build more apartments on, too, which
That's true, too.
could be a problem.
That's a threat. You got crap on one side, threat on the other.
We tried to buy that a couple times. Part of the problem was they couldn't fill it. So even after it had been built for 2 years, when I looked at the last rent roll, if I counted their notices to vacate, they were running at about 55% occupancy after 2 years. So it never stabilized. It ended up selling for cash to a young guy in his 20s who made a bunch of money on Bitcoin or something, on crypto.
Wow.
And he came in and I think he just scratched a check. He ripped it. I mean, he bought it for like $180,000 a door on brand new product. But he paid cash, had the money. You know, I mean, I don't know if it's a wise long-term decision, but it's better than, I don't know. You can tell me, Mike. Maybe he should have kept Bitcoin.
He might be regretting that decision right now in a vacuum.
Well, he probably made more than that.
You're 20 and you're trading Bitcoin for a rip in apartments. That life's probably, your decisions aren't, it's probably okay.
I think he's going to be all right.
Yeah.
Writing a check for a...
Yeah, I mean, it has
Complex.
income.
Yeah.
We may look at it and go, "You're dumb," and he's like, "Yeah, I got income."
He'll always be able to
Yeah.
get out of it what he paid.
Probably more stable than Bitcoin.
Yeah.
Yeah. Certainly.
Interesting. What's your favorite market? Do you have a favorite of all the places that you're invested in?
Well, Albany was really good to me. But I'm all the way out of Albany now.
That's just because you love your deal you bought for 6.5 that sold for 18, though. You can't get that one out of your mind.
Yeah, but I came out okay on the park also.
You did.
Mm-hmm.
You
There
did.
was one clear across town, I'll call Fifth Avenue Apartments,
Mhm.
18 units. I did really well on that one.
Okay.
So Albany's been good.
For the longest time, Albany, when I first got in the business 13 years ago, I remember the first few years we would do our rent surveys, and Albany would always run about $100, $150 more in rent than what we had in Salem, pound for pound, same kind of unit. And over time, that sort of balanced itself out. And now it's interesting because at that time, in those days, Portland was double what Salem was, and Albany was even higher. And now when you look today, Albany, Salem, Portland all run pretty close together. There's not a huge delta between them. There's not the big spread that they had. But I love the markets that are right close to us where you can get another, even like Dallas, Oregon is a good example. Like we get a couple $100 more per rent on the same kind of unit in Dallas than we do in Salem. It's only 10 minutes away. And it's Dallas, but who thinks about Dallas, right? So these little markets, if you're paying attention and you start looking at what's happening in the rents, there are some markets that definitely outperform others. Now, if they overbuild Dallas or Monmouth or one of these other spots, I mean, you run into the same problem is that it's such a small market. People see that the rents are higher. It justifies development. Now it gets overbuilt and all that's got to work itself through before it's a good market again. So it's just a cycle that we go through. Okay. Did we talk about all the deals you wanted to talk about? Are there other deals you wanted to tell? Is there like, what's the most exciting thing? Like, is your Albany deal, the 100 unit? Is that the best deal you ever did?
Yeah, that was the best deal.
Was it as exciting as building your towing companies and buying your towing companies and doing all the stuff you were doing back with Speeds? Does it give you the same juice?
No, I don't think it was that exciting. I mean, the old saying is, if you love what you do, it's like never
having to go to work. Yeah, you're retired.
Well, that's the way it was at Speeds.
Okay.
I loved what I did.
Okay.
I loved being on top. I loved, that was just an exciting era.
Yeah.
I had a lot of good people work for me. I invested a lot in education, bringing speakers in and pushing my cassette programs on people. We were on a roll.
Yeah.
And so that was hard to match. You can't match that with some apartments.
Yeah. All right.
Sorry.
Yeah, I totally agree with you. You can't lead apartments. You can't lead sticks and bricks.
Yeah.
But you can motivate people.
Yeah.
And you can give them cassette. You can plant little seeds, and then you can see how those seeds get watered with their energy and their equity, their sweat equity in life.
Yep.
Yeah.
The thing that keeps me buying buildings is I've seen the spreadsheet. So, unfortunately I know Trevor, And so he shows me, I can see what I make in my businesses, which is good, and it's exciting, and I love building it. I'm like you, it's fun. Like it makes you want to get up in the morning and go do it. The buildings, though, if I look at the spreadsheet, outperform me by about 5x every time. And I'm like, well, dang, I guess I'm going to have to go buy buildings. So then you kind of make a game out of buying buildings too, and it's a little bit different. But it's fun it's fun, like you said, when you're winning, you're on top.
Yep.
You're the biggest in the nation. You're building something, and you started it from a tow truck and grew it into this big empire. Now, when you think about your retirement, though, and getting to go spend weeks in Italy and doing all the things you're doing, I guess you could have sold speeds and made a bunch of money and just retired on that. But the apartments give you steady cash flow, and they allow you to live a lifestyle that maybe just, to me, the business is great, but then when the business is over, it's just not, it's great for cash flow, but it's not really great for building tomorrow money and having that equity to live on and enjoy the rest of your life with. So,
but fortunately, I'm still involved in the towing industry.
Yeah.
One of my race cars is on the front cover of Tow Times magazine this month.
Congratulations.
Yes, and 2 weeks from now, I'm going to D.C. We have a lobby group of about 40 of us. We'll be there to call on various politicians with issues with our industry.
On towing. Yeah. That's good.
So, you gotta stay involved.
Still involved. And your kids are involved.
Yep.
Do you still do like presentations and speaking and stuff like that, or you're more?
I haven't done that for a while now.
Okay. Your identity's changed a lot from business owner, leader to asset manager. That's a big difference.
Yeah. I tell my wife once in a while, I used to be famous. She says, "What's so important about that?" I said, "Nothing. I just kind of miss that."
That's pretty fun.
It wasn't important until it was gone. Well, you're still famous to us.
Yeah, thank you.
And you're going to be we're going to make you famous again. All our listeners are going to hear this story and be stoked to hear what you had to share with us today. So, all right, guys, I think we're going to go ahead and wrap it up. Gary, again, so grateful you're able to make it on the show with us today.
Thank you.
It's been really fun hanging out with you. This is why we do it, so we get to hang out with cool people like you. And your story is super inspiring and invigorating. It makes me want to go do more. So we hope that all our listeners enjoy this episode. Please share it if you like it. And shout out to Speeds Towing. Like, you need some help? Call Speeds Towing.
Thank you.
Absolutely.
Thanks for being on the show, Gary.
Thank
and
you.
thanks for listening, Deal Junkies. We'll see you next time.